Hello everyone and welcome to the Cognitive Living Room. Welcome to the stock market, the secret of trading. Here, I will help entertain and educate you how to be a better trader and investor. If you are new in the Cognitive Living Room, make sure you click on the subscribe button. My name is Attila Németi and our topic today is the first step to your stock trading success. So let's jump into it. Everybody wants to know what is the secret of successful trading. Well, it's two words. Science and art. Science will help you to enter a stock and art will help you to exit a stock. But before we talk about how to use science and art to enter and exit any stocks, let's talk about the basic foundation of the stock market. You heard about Wall Street, but do you know what Wall Street is? Wall Street is an 8-block long financial institution placed on the Lower Manhattan in New York City that operates with 3 major trading floors. The largest and number one is the New York Stock Exchange, nicknamed the Big Board. It trades approximately 1,900 publicly traded stocks. From that, 1,500 are American and 400 are foreign stocks. The second largest is NASDAQ, nicknamed the Qs. It trades around 1,500 stocks. In the last 25 years, NASDAQ grew tremendously. You can ask, what is the reason for NASDAQ to grow so rapidly? The information revolution, the birth of the internet in 1995, computers, networks, search engines, everything with bandwidth and Internet of Things. In human history, every 500 years we have information revolutions. The previous to this one was around 1455 when, first time in history, Johann Gutenberg printed the Bible. I believe 48 Bibles still exist of those prints. When you become profitable trading stocks, you should buy one. The third largest financial institution on Wall Street is the American Exchange that handles about 10% of all securities traded in the US. It trades mainly options and underlying securities of ETF stocks and indexes. You could ask again, what are these indexes? The stock market index is a collection of different types of stocks that measures the stock market and helps investors to compare present to past price levels to calculate performance. And people follow these indexes for directions because they believe wherever these indexes go, the rest of the stock market will follow. The 3 largest indexes that people follow are, number 1, the Dow Jones Industrial Average or DJIA. Dow Jones tracks 30 large publicly owned companies on New York Stock Exchange and NASDAQ. Number 2, S&P 500 or nicknamed SPY. The S&P measures the stock performance of 500 large companies and it's the most commonly followed index. I do follow this one. Number 3, NASDAQ 100 or QQQ, nicknamed the Qs. NASDAQ 100 index is a basket of 100 stocks of the largest, mostly high-tech companies. Now, let's talk about the stock market. What do you think? What is the stock market? The stock market is an economical and political reflection of the world represented by around 8,700 companies. Stock market goes up, stock market goes down on a daily basis. But where is the fuel coming from to make the stock to rise and or fall? It's coming from your fear and greed, 2 of your emotions. Now let's look at a stock together. Let's look at Microsoft. If Microsoft has more buyers than sellers, the price of Microsoft stock will rise. If Microsoft has more sellers than buyers, the price of Microsoft stock will fall. It's supply and demand based on your fear and greed. Many people believe that if you trade or invest in the stock market, you are gambling. Are you really gambling when you trade in the stock market? What do you think? First, let's see what is the definition of gambling. Gambling is the betting of money or something of value when the odds are against you. So, if your odds are less than 50%, yes, you are gambling. Let's look into and compare three popular gambling games. Number one, the roulette. When you play roulette and betting on a single number, your odds to win is around 2.6%. That's not a lot at all. 2.6% against 97.4%. One of your best odds in the roulette when you play black or red. Your odds are to win is around 47.4%. 47.4 against 52.6%. Let's look at another gambling game, blackjack, number two. Do you think you are a good blackjack player? Well, when you play blackjack, your odds to win on the long run is around 42.2%, so not really good odds. Number three, slot machines. That is one of the worst. When you play slot machines, your odds to win are varies between 37% to 48%. It depends on the algorithm of the machine. Now you understand why Las Vegas looks like the way it does. The house always wins. If you trade or invest blindly in any stocks when the odds are against you, yes, you are gambling. So how can you trade in the stock market when it's not gambling? First of all, because the 8,700 companies traded in the market are fundamentally and technically an open book to the public. What does that mean? It means free information for you. It means that you must investigate and do your due diligence both fundamentally and technically about the stock you want to trade. You can look up any information you want to know about any stocks, except of insider information, of course. So, what do you do with this public information? You create a blueprint of the stock you want to trade. This blueprint is going to be your guide and weapon of your trade. That blueprint will help you to control your risk and rise the level of your odds to make money and become profitable. In some cases, to make money, your odds could rise to 75 to 80%, and once in a while, you will always find a stock that is a no-brainer. Later on, I will have a webinar about how to create a blueprint for trading stocks. So, if you like what you see, subscribe and keep watching. Oh, just a friendly reminder. For many of you, to step into the world of Wall Street is a brand new entity, so if you don't understand something, I speak too fast or my accent is too weird, you are more than welcome to stop the video and type a question in the comment section. Make a note, rewind the video and watch it again. Please don't forget, information leads to knowledge. Scientia protesta est. Knowledge is power, as the Latin says. So, let's continue. When you go to a war, besides great strategy, you need up-to-date, good, useful weapons to win. Driving through cross-country without a guide, you would feel lost, so you need maps or GPS. In trading, your tools to win or be guided are the fundamental and technical indicators that helps you to analyze the stock, the index, and the stock market. So let's look at the fundamentals first. Fundamentally, you can trade in 7 different ways. These 7 fundamentals are: number 1, the trend and the direction of the market. Number 2, performance. How is the stock doing? Number 3, volume of the buying and selling. Number 4, momentum or the lack of the momentum. Number 5, economy of the stock, supply and demand of their products, cash flow or P ratio, or etc. Number 6, volatility. And number 7, psychology of the trading, what is nothing else than your fear and greed. Now let's look at the technical indicators. Technical indicators are based on the data of the past performance of a certain stock, where the indicator tries to aim and predict how the stock in the near or long future will do. Many people believe from a last performance of the stock, you cannot predict the future performance. And they are right, except the market makers, who are working with billions of dollars using the same indicators too. To be profitable, you should just watch what the market maker is doing and be on their side. Buying and selling stocks on the market, you could choose from 350 technical indicators. If you are a newbie in the market, when you paper trade, you should try out every one of them to see which one you like, which one works for you. When you do so, you shouldn't make a judgment call only by one indicator. You should find a collection of indicators that works for you, guide you, and help you to make a decision. I personally use 15 technical indicators. If 80% of them telling me to buy or sell, I act on it and make a judgment call. Some investors trade only fundamentally. Some traders use only technical indicators. I trade 20% fundamentally and 80% technically. That's what works for me. That's it for today, folks. If you liked our webinar, don't forget to push the subscribe button so we can notify you when our next new video coming out. In our next webinar, we will talk about the fundamental indicators. It's gonna be exciting, and I hope to see you there. Strength and honor, I'm Spartacus!